Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Jamal Mecklai, founder at Mecklai Financial, joining in. Jamal, always a pleasure to speak to you. Welcome to the show. My first question, Jamal, coming to you over here is, taking the kind of euphoria that we've seen that COVID has created for the financial markets, for the economy, and from the healthcare perspective, we've seen a lot of ups and downs from March 2020 to now. Taking into consideration all of this, the current situation as well, what's your assessment of how the markets have been, especially from the money market perspective?
You know, one of my I'm an old fart, you know, so I've found myself becoming more conservative over the years. And one of the things that I have all felt for a long time, is that with all the money coming into the US markets all over the world, asset prices have gone much too high and that they should come down to earth. And I've felt this for a long time. But now I've been feeling, perhaps there is some kind of structural shift, right? And I think the very fact that there is so much money being created by people, by investor types, right? And that money is so much you can't even think. It was a huge amount 5 years ago. It is incomprehensible now, you know. So that money is going to keep asset prices underpinned, I feel. Uh, the questions are the risks to that, if you will, are to my mind political, because the flip side of all of this is that there are a lot of people who are really, I mean, in India, forget about it, but even globally, people who are in pretty bad shape. And I think the politics is finally waking up to that. So we're going to see more taxation without a question. So these are things that may create some volatility. But perhaps, and I'm not sure, we're sort of in a new paradigm. So, asset prices, I mean, I'm not selling, let's put it that way.
Correct. So Jamal, currently as well, what's your read with regards to where inflation is concerned, with regards to growth? Because again, if the RBI is going to focus on growth, inflation is something what everyone is saying that they will have to ignore. And if they ignore inflation, what's the kind of impact we could see on the Indian rupee?
See, first and foremost, they cannot ignore inflation. Again, like I said, politics is going to be louder and louder in terms of, my God, what's going on. Now, one of the things about inflation, I mean, on inflation, I'm much, much, much more hawkish than almost anybody else. I felt for a long time, over a year, that in the US, rates are going to go up and India rates are not going to go down. And one of the things I've learned, again, over decades is that, a few assets, but certainly interest rates, when they start to move, they move faster than anybody expects. So I think we're going to see higher interest rates in the US sooner than most people expect, which of course will draw some money out of India, right? But I think, again, I come back to the first point, the huge amount of money. Now, what is it? I feel what is driving the rupee right now is actually direct investment. Like I said, the proliferation of unicorns, it's out of control. Right? 200 million, 300 million, ajao, Who was it? Ola. In fact, I have a very good friend at Warburg, and I said, well, give me 1 or 2 million here. They put some money into Warburg, into Ola. And then again, these unicorns will also have IPOs, Master Paytm. So I think the wave of money, it's not simply a function of US interest rates anymore. Right? It used to be that was the real driver. So that's going to, I think, keep us well underpinned, which will, of course, have downside. I mean, our exports right now, exports are doing well because the economy is on its back, right? Imports are really insignificant, but then again, you've got problems with oil, right? So fundamentally, I'm saying volatility is going to be a big story, right? Where the rupee will go, I mean, I don't know. You don't know. Nobody knows. You can talk about it all you like, but it's crazy to try to take a bet, right? And not if our business is with companies, right? If you're a trader, is another story. Volatility is your your bread and butter. So you find any market where you can uh, not control the volatility, but where you can try to go in and out effectively quickly.
Right. So, with all of this, what do you make of the liquidity in the system? Because, as you mentioned, how markets move in India is not going to be only a function of the US money market as well. However, taking the liquidity into the system, if US starts pulling out the liquidity, do you think that's something which could impact us to some extent?
See, I think, as I've been saying and as you're reiterating, is that the market, there is a delinking, right? I mean, our liquidity is, the government is like trying to protect business, and they pumped in as much liquidity as they can. Uh, but to my mind, it's going to the wrong places. I mean, ultimately, you have to look at growth, means you have to look at demand, means that's where you need to put your money. So, I think the RBI has done a great job, frankly, and he keeps talking that I'm not going to let rates go up, but they're going to go up. There is no question in my mind. And I don't think that, I think the situation is so, uh, uh, it's not a normal situation. So I think you can have high liquidity and rates going up.
Hmm. Okay. And overall, with what you said right now, if you have to look at, how the FI flows are coming into the country, we've seen a lot of selling that's happening into the equity markets right now. If the selling intensifies, do you think that's something which will start putting pressure?
See, of course it will put some pressure, right? But my point is, let's understand, at least I think, it used to be that was the big daddy, right?
Hmm.
When we had that taper tanter, FIA, bhago, bhago. But now there are other forces. See, last year there was Reliance, but now it is this fact that there is all these investors. I mean, the whole nature of venture capital has changed. There used to be 3 million, 5 million, now 200 million. And India is looking good from that perspective. We've got and they're going to be more. Our people are going to be betting on there being more. I mean, so I feel that that is the money that is going to keep the rupee up, which is good from an inflation standpoint.
Hmm.
But it doesn't seem to be too bad from a competitiveness standpoint right now, right? Of course, I mean, every exporter I talk to, they're booming, right? So maybe we are in sort of a sweet spot as far as the rupee goes. We're not in a sweet spot as far as growth goes, right? And that, I think, come back to the pavilion, that's the political story which really has to be addressed.
Right. And with this, how do you read the widening trade deficit as well as the rising commodity prices?
See, commodity prices are an issue, and that's another thing I mentioned. Interest rates start moving. Oil is another guy like that, right? Oil is like, whoa, it's very, very close to breaking free, right? And see, again, like I said, it's a new world. So all the old tricks that institutions had to calm things down may not work anymore, right? I don't know what this Afghanistan thing is going to do in the world also, But the trade deficit is actually not doing as bad as it was because imports are not up. Imports have not yet started because there's not a whole lot going on the ground in India. Exports are booming. So, I mean, we will not compete with last year's current account surplus. I mean, that's crazy. So you should see, but again, like I said, it's the capital account which you got to focus on and try to distill out the difference between FII, FDI, and let's call it FUI, foreign unicorn investment. I should write that somewhere.
Right. So Jamal, I mean, that's a new one, that FUI is something that we will start using from here on. However, as we talk about, that yes, you cannot really predict the kind of levels that we could see on the Indian rupee. But if today you have to put in your money, would you be a buyer or a seller of the Indian rupee?
It really depends. I would buy sometimes, I would sell sometimes. I would trade, but I would trade only on an intraday basis.
Hmm.
I would not carry it overnight. And we've developed a model to do that. Maybe I should talk with your company to market it, where you can see. Uh, this is not true of the rupee. This is true of any asset, right? You just trade with a good stop loss and get out of the market. Because particularly when markets are volatile, if you hold your stop loss tight, all right, you lose. But when you gain, you'll gain a lot more. So you can always make money, I think. So like I said, I would buy and I would sell, depending. I don't have an answer to that, but I buy
Right.
or sell.
And what's the view that you have for the dollar?
Identical. I don't know. I mean, how can anybody know, right? I mean, there's no change. Why should I know the dollar and if I don't know the rupee? There were a lot of people who were super bearish, right, on the dollar some 6-8 months ago. Big names. I always say one of the market's one of its jobs is to make the smartest guys look like Budhus. And it does that regularly. Dollar did not fall as everyone said, right? Dollar is actually, it's going up and down, which it's doing its job. It's rising and falling. Don't try to make money that way. You can make money again, like I said, but you trade with a stop loss and trade very, very short term.
Okay. And very lastly, Jamal, what's the view that you have with regards to where the bond yields are concerned from here on, taking into consideration all the macros that we should be looking at?
See, again, I mean, for some reason, I feel, as I've said already, I feel like bond yields cannot come down. I mean, there's just been a little signal that it's gone up. Of course, RBI is going to try its best not to let it go to hell, right? But see, over the next couple of years, like I said, I come back to politics. If the government does not invest in people, right, they are going to lose the next election, right? Now, if they invest in people, the deficit is going to go up. So I'm saying it may stay around 610, 615 right now, but I think it's going to inch higher over the next 2-3 years.
Okay. And overall, if someone wants to look at the currency markets right now as a new investor, what would your advice be?
How do you mean? You're asking me the same question. Should they buy or should they sell? Give it to
No,
me.
I'm
I'll
not
take
saying
care of
buy
it.
or sell. I'm saying just if someone wants to start looking at the currency market, what would your advice be as to how to track, what they should look at? What are the factors that they should consider?
See, I'm saying you can consider any number of factors. Nothing's going to help. But I will say we're just experimenting right now with a algorithm we've developed,
Okay.
which has been producing very good results. But you got to test it. It's run very well for a year on very small amount of money. But you got to put it in the market. And again, it follows the very simple principle, like I said, that I'll keep a tight stop loss. So I'll get hit a lot of the time. But see, the rupee moves by average. I think the average move intraday is about 18, 20 paisa, right? But the high moves are 50 paisa, 60 paisa, etc. So I want to stay in the market to capture those. So I'm saying the only way to deal with any market is to trade it professionally. You can't look at, trade deficit and this and that and the other. Those are all very good for sitting around and gassing while you're having a drink. You can't use that to take a decision on the market.
Correct. Absolutely. And I think knowledge from someone like a Jamal is something which is a must as well. Thank you, Jamal, so much for joining us on the show. Always a pleasure to speak to you. Stay safe. I hope you enjoyed speaking as well. Thank you so much.
Okay. Good luck. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.